The bottom 50% of people own almost nothing that grows in value. Their wealth disappears as fast as they earn it. The next 40% own some assets, but not enough to ever break free. The top 10%, they own almost everything that compounds, and that's why they stay rich. The truth is, assets come in levels. Some drain you, some protect you, and a rare few build wealth that lasts for generations. In this video, I'll walk you through the 7 levels of assets, so you can see exactly where you stand and what the next level looks like. Level 1, no assets, net worth 0 or negative. This is where half the population lives. You work, you spend, and at the end of the month, there's nothing left, sometimes less than nothing. Your only assets are the things around you that lose value the moment you touch them. Rent payments, bills, maybe a car that's worth less every year. If you've got debt on top of that, your net worth is technically negative. At this level, you don't own anything that grows, so your future depends entirely on your paycheck. The minute that income stops, everything else collapses. That's why wealth feels impossible from here, because every dollar you earn is already spoken for. But here's the shift. At level 1, your biggest investment isn't financial, it's mental. The job is to stop leaking money on things that disappear and start building the mindset to own even the smallest real asset. Because until you break out of zero, compounding can't even begin. Level 2, depreciating assets. At this level, you finally feel like you own something. Maybe it's a car, a brand new iPhone, a big TV, or even some furniture you financed. On the surface, these look like assets because you can touch them, show them off, and even resell them later. But here's the truth. The moment you buy them, they start losing value. Drive a $30,000 car off the lot and it's worth $25,000 before you even get home. That investment watch? The second you wear it, it's worth less on the resale market. Even high-end gadgets and luxury items eventually become outdated and replaced. They give you comfort, they give you status, but they don't give you wealth. This is the trap most people get stuck in. Confusing ownership with investing. Just because you own things doesn't mean you own assets. Real investors know the difference. Assets put money in your pocket. Depreciating items take money out. At this level, the challenge is breaking free from the illusion that buying more stuff is progress. True wealth only starts when your money flows into things that grow, not shrink. Level 3, stored assets, cash and savings. This is the first time you actually feel a little safer. You've got some money set aside in a savings account, maybe even a small emergency fund. For the first time, an unexpected bill or car repair won't completely destroy your budget. On paper, it looks like progress, because it is. You've stopped living paycheck to paycheck and you finally have a small cushion. But here's the catch. Cash doesn't grow. Inflation slowly eats away at it every year. That $1,000 in the bank today might only buy you $900 worth of goods in 5 years. It's a step up from having nothing, but it's not wealth. It's just storage. For beginner investors, this is where the temptation hits hardest. Keeping money in the bank feels safe, but safety comes at the cost of growth. The key lesson here is that savings are for emergencies, not for wealth. To climb higher, you have to move money out of storage and into assets that work for you. Level 4, collectible assets. This is the stage where people start feeling like they've leveled up from just saving cash. Instead of watching money sit in a bank account, they put it into things they believe will hold or even increase in value. Gold, silver, watches, art, rare sneakers, or crypto. These feel like assets because you can point to them, touch them, and even brag about them. And sometimes, they do pay off. Gold historically holds its value against inflation. A rare Rolex or limited edition sneaker can sell for double the purchase price if demand rises. Crypto made overnight millionaires during bull runs, but here's the catch. They're unpredictable. These assets don't generate income, they don't compound, and their value depends on someone else being willing to pay more later. For investors, collectibles are a hedge, not a growth engine. They're good for diversification, maybe even for fun, but they can't be the foundation of your wealth. The mistake most beginners make at this level is confusing speculation with investing. Collectibles can protect you from inflation or economic shocks, but they won't consistently move you up the wealth ladder. True growth begins at the next stage, with paper assets that compound over decades. Level 5, paper assets, stocks, and bonds. This is where real investing begins. For the first time, you're not just storing or speculating. You're putting money into assets designed to grow steadily over decades. Stocks, ETFs, index funds, retirement accounts, government bonds. These are the building blocks of wealth for the middle and upper class. The magic here is compounding. $500 invested every month into an S&P 500 index fund might not look exciting today, but fast forward 20 or 30 years and you're looking at hundreds of thousands, even millions, depending on consistency. Unlike collectibles or savings, these assets work while you sleep. Companies reinvest profits, bonds pay interest, dividends compound. Your money is finally doing the heavy lifting. At this level, you stop gambling and start thinking long term. You don't panic when the market dips. You see opportunity. You don't chase hot stock tips or hype coins anymore because you understand the boring truth. Wealth grows from patience, not luck. For beginner investors, this level is a turning point. It's accessible. You can start with just a few dollars. It's scalable. You can keep adding over time. And most importantly, it's proven. Almost every wealthy person has built their foundation here. Paper assets are the bridge between being financially stable and becoming financially free. Level 6, tangible productive assets, real estate and businesses. This is where your assets stop just sitting there and actually start producing for you. Instead of relying on market charts or price tags, you own things that generate cash flow while also appreciating in value. A rental property, farmland, or a small business. These aren't just investments. They're mini systems that put money in your pocket every month. Take real estate. Your tenants cover the mortgage, property values rise over time, and you get steady cash flow. Or think about buying into a small business. While you own part of it, you also share in its profits. These assets are harder to get into than just buying a stock. They demand more capital, more paperwork, and often more risk. But they also come with leverage. You can use financing, partners, or even other people's skills to grow far faster than you could with just your own cash. The key lesson here is control. Unlike paper assets that follow the market, tangible, productive assets give you a say in how much they earn. Renovate a property, raise rents, improve a business, you can directly increase value. For investors, this is often the first time you stop depending purely on the stock market and start feeling the power of ownership. And ownership is where wealth starts to compound in ways that pay you for life. Level 7, scalable wealth assets, ownership and leverage. This is the top of the ladder, where assets stop being just investments and start becoming systems. Instead of owning one rental property, you own a portfolio. Instead of running one small business, you build or buy companies that can scale without you. Or you create intellectual property, books, software, online courses that can sell thousands of copies without you lifting a finger. The defining feature of this level is scalability. Your wealth is no longer limited by your time or even your direct involvement. The assets you own continue producing cash flow, whether you're working, sleeping, or traveling. And because you've learned how to use leverage, mortgages, business financing, or even other people's time and skills, you can grow faster than relying on your own money alone. For investors, this is where generational wealth is built. These are the assets that don't just support your lifestyle, they support your children's and grandchildren's. They create freedom, sovereignty, and influence. But just like with leverage in the stock market, the risk is real. Scale multiplies mistakes as much as it multiplies gains. The difference at this level is control. You design systems so that your assets work harder than you ever could on your own. So now you know the 7 levels of assets, from the things that drain your money to the ones that compound into real wealth. The next step is learning how to actually invest in the right assets to build your portfolio. That's exactly what I cover in my free investing masterclass. Inside, I'll walk you through everything. It's 100% free and you can watch it right now using the link below. I'll see you inside.